Let's bring in Alex Coffey, senior equities contributor, to help set up the action today, also co-host of NextGen. Alex, thanks so much for getting up early with us. I know you already get up early, but let's talk about the latest with these trade tensions. There are some negotiations happening on one side, but the U.S. and China seem to really just continue to be butting heads.
Yeah, the reality is the escalation with China is largely creating two sides, and the rest of the world is largely going to likely have to find whether or not they want to continue doing business with China or side with the United States. It just seems to be the economic reality at the moment. But when you went through your sort of lead stories there, one thing I think is important to note is what is a recent theme that we've started to see. Well, there's two of them. The first one is realized volatility in the market has started to come down. Now, I know there was a pretty big range last night, but there were also some pretty big headlines in the last 12 to 24 hours that have led to some of those bigger moves that are still significantly smaller than what we had seen a week and a half ago. The second is throughout earnings season now, and just generally from companies, we're starting to get real numbers of the impact. So whether that's United, which I know you're going to go through with Jenny in a moment, or Nvidia, which we're going to discuss a little bit further in a moment, we're starting to get real dollar and cents impacts of what this may be.
So speaking of real dollars and cents impact, now we've got even tighter controls happening over with Nvidia. This has to do with the H20 chip. Tell people what's at stake here.
Yeah, I think what's at stake here is that there's a meaningful but definable amount of the business for Nvidia and some of its peers, whether that's AMD, Broadcom, or others, Micron, that may be in current expectations or expectations prior to this update for earnings and revenue that may not actually come to fruition as long as this trade war continues to escalate. And what the details were is that there's a write-off essentially in takedown in charges of $5.5 billion related to basically export controls from the U.S. that would require licensing that they're probably not going to get in the interim to sell the H20 artificial intelligence chip to China. And so depending on the analyst shop, they may have already kind of seen this ahead of time and priced things in. That was sort of the sentiment that Citi had, is they basically said they're going to keep everything the same because they already had de-risked their estimates for this particular China sales. But other places like Raymond James had to make adjustments to basically further de-risk their own estimates for this. But to me, the fact that you do see, tech underperforming makes sense, but this is a reasonable response when you got a name like Nvidia down, over 5% in the pre-market, a name like AMD down over 5% in the pre-market. You should see the market lower. But the fact that those numbers are, 5 to 8% and not 10 to 15 or 20% goes to show that a lot of this was starting to be reflected in market prices, but that the market also likes certainty. Even if that certainty is somewhat disappointing, it's better than complete unknown.
That's a good point. That's fair. I do feel like we're starting to get more clarity in a lot of different areas. And so you can account for this. And especially, obviously they're mentioning this write-down effect because of this, but at least there is a dollar and cent tied to this. But let's talk about that point you made about realized volatility starting to come down. What kind of impact are you expecting to see as it relates to volatility and price action in today's session, not just for equities, but including the bond market as well? We've started to see some of that volatility that we saw hitting the market, seep out this week as well.
Yeah, I think the Treasury point's are a really important one. The fact that the Treasury's volatility has come down dramatically and that you've seen stabilization in that marketplace, I think really calmed worries across the street. That's really when you started to see what some could define as capitulation or kind of a loosening of the rhetoric out of the administration when it came to some of this trade policy. It was when there was the 90-day pause was announced, was when things really started to get crazy within the Treasury market. It was never the stock market, I think, that brought those fears. That said, stock market volatility has come down dramatically as well. You can see that in the VIX, but I think it's even easier just to look at the ranges that we've seen. We were having 5 straight days, I believe it was, of over 350 points in movement in the S&P 500 futures, peaking out at 650. It was like 648.5 on the biggest day. Well, yesterday it was only 71 or 72 points. Overnight, it's been something like 80 or so points, top to bottom, I think 85 points. So, sub 100, these are still big moves, and who's to say that it can't grow as the day goes on? But, it's a fraction of where it peaked out when we had, an 8% rally intraday in the S&P 500. So it's a lot healthier to see, more, digestible, I could say, market movement from a minute to minute, hour by hour, manner. It allows for liquidity to return, and it allows for confidence to return. So the fact that we've seen it happen in the Treasury market was important. The fact that we're starting to see it happen in the equity market is also important.
And Alex, just want to get a quick final thought on you. What are you noticing in terms of volume for this week? I know we've got this holiday shortened week. Are you noticing any patterns that you want to point out there?
Well, I guess broadly, I can't comment because I haven't looked at it in a deep dive, but what I can say is a really quick kind of, one number check that I do when it comes to market activity is I'll just look at E-mini S&P futures volume, and I can say the last 2 days have been the lightest 2 days of the month when it came to that particular metric. So again, it's just one small piece of the marketplace, but I would argue it may be the world's liquidity in many ways when you look at S&P 500 futures. So the fact that that volume's come down, the fact that the realized volatility has come down, tells me that while things haven't completely normalized, they're working towards it.
All right. It certainly seems that way in terms of, especially when you look at, to your point as well, about where volatility is, and we're not seeing, kind of those historic moves that we saw last week. Alex, great insight. That's Alex Coffey, senior equities contributor, co-host of NextGen.